In this video, we're going to talk about what a merchant cash advance is, or MCA, what the pros and cons are, and how to apply for one if your business needs cash quickly. As always, if you find this video helpful, please take a second to hit that like and subscribe button. Make sure to also request your free custom business funding plan in the description below to find out what the best funding options are for your business and industry. A merchant cash advance (MCA) is a type of financing that provides small businesses with an upfront lump sum payment in exchange for a percentage of their future credit card sales. The lender determines the amount of the advance based on the business's credit card processing history, and the advance is repaid through a holdback percentage of the business's credit card sales until the advance is paid in full. One advantage of a merchant cash advance is that the repayment is tied to the business's credit card sales, so the business only needs to make payments when it generates income. This can be helpful for businesses that have fluctuating sales or that are seasonal. However, merchant cash advances are generally more expensive than other types of financing, such as a small business loan or a line of credit. The holdback percentage can be high, and there are usually additional fees associated with the advance. For this reason, merchant cash advances are usually a last resort after all other funding options have been explored. Let's first talk about some common reasons why a business would need a merchant cash advance. Reason number 1, to cover short-term expenses. A merchant cash advance can provide a business with access to funds quickly, which can be helpful for covering short-term expenses, such as purchasing inventory, paying bills, covering payroll, etc. Reason number 2, poor credit. Some business owners have good credit sales every month, but lack the credit score and history to get funding with more favorable terms. This makes a merchant cash advance more attractive because lenders typically look at the volume of credit card sales versus the borrower's credit. Reason number 3, debt consolidation. This may seem contradictory since the interest rates and fees for an MCA are usually high. However, if the business owner has multiple loans or other forms of debt, consolidating those debts could improve their credit score. This would then allow the business owner to refinance or pay off the MCA, and then get funding with more favorable terms. Next, let's talk about some of the pros and cons of merchant cash advances. Pro number 1, quick access to funds. A merchant cash advance can provide small businesses with access to funds quickly, often in as little as a few days. This can be especially helpful for businesses that need to make a purchase or meet a financial obligation quickly. Pro number 2, flexible repayment. Repayment of a merchant cash advance is tied to the business's credit card sales, so the business only needs to make payments when it generates income. This can be helpful for businesses with fluctuating sales or that are seasonal. Pro number 3, no collateral required. A merchant cash advance does not require collateral, hence the higher rates and fees, so it may be an option for businesses that do not have assets to use as collateral for a loan. Con number 1, high cost. Merchant cash advances are generally more expensive than other types of financing, such as term loans or lines of credit. The holdback percentage can be high, and there may be additional fees associated with the advance. Con number 2, short repayment period. Repayment of a merchant cash advance is typically expected within a few months to a year or two. This can put a lot of pressure on the business owner, especially if cash flow continues to fluctuate. Con number 3, potential impact on credit. A merchant cash advance may not be reported to credit bureaus, so it may not have a positive impact on the business's credit score. Additionally, if the business is unable to make the required payments, it could have a negative impact on its credit. Make sure to fully understand the terms and conditions before moving forward with this type of financing. So how do you apply for a merchant cash advance? Like most types of funding, you'll need to complete a standard loan application, and then provide documents like credit card and bank statements. Here are some companies that provide MCAs that you can explore: National Funding, Rapid Advance, Fora Financial, and On Deck. There are obviously many more than that, but those will get you started. Just remember to get a couple of quotes and make sure you fully understand the terms of the loan. The last thing you want to do is sign a contract for funding and then be surprised by the rates, fees, and repayment terms later on. With that said, it may be a good idea to work with a qualified business loan broker who can help you determine which loan type is best for your business and your goals. There is usually no cost and can save you a lot of time and money in the long run. If you'd like to connect with a loan broker to discuss your funding options, just click the link in the description to request a free custom business funding plan.